Back with the market right here in ETNOW. Important to check in on how Asia is actually absorbing, Pakistan peace talks getting failed, and 0.5% lower for the periphery markets, 1% lower for Japan. Hong Kong is lower by 300 points, and Shanghai as well is mildly soft as we speak. Important to check in on the US futures as well, and Dow futures have knocked off about almost 500 points, currently lower by about 400 points as we speak. 0.7% loss for S&P futures, and the Nasdaq futures as well lower by about almost over 200 points as we speak, as the Strait of Hormuz blockade talks fail. But what's in store for Indian markets? Let me welcome on board Sunil Subramaniam to chat about exactly that. Sunil, hi, morning. Great to have you on the show. Sunil, as always, the news flow is pretty volatile itself, and we're bracing ourselves for once again a volatile and a weak start this Monday morning. But what's the message to the investors? Do you think last week's, at least near term, you think a bottom may be in place?
Hard to say that, especially with the fact that when the markets closed on Friday, the ceasefire was on. And over the weekend, it's developed for the worse. And I think that today will be a weak start. I think GIFT Nifty is already showing the 350 point down. But it's also important to note that on Thursday and Friday, there was a bit of positivity. FIs had turned positive, very small amount, 600 crores, and turned positive. Retailer also turned positive over the last Thursday and Friday. So I think a bit of longs would have been, the technical analysts would explain that better. A bit of longs got built up, I think, because there was this optimism around the ceasefire. Today, those longs will get uncovered. And so market could start off very weak because of this. And second is DIIs will not yet fully come and support, as is clearly seen from the waning DII net positive flows. It's only 400 crores on Friday and over 1,000 crores on Thursday. The reason for that is DIIs are keeping their gunpowder ready for the earnings season, for them to take a call. Because this is very crucial earnings season. Because yes, the March impact of the oil price hike will be there in the earnings. But that's been kind of discounted, and consensus estimates would have been downgraded to that extent. But the guidance for the future, because this is the beginning of a financial year. And so for you, FY 26-27, what are the Nifty EPS, the mid-cap EPS going to look like? And what is the forward P going to look like? Because we're all talking that we are below our 5-year, 10-year averages. But you now have to downgrade the future earnings. Earlier, there was a 14% expectation around the Nifty. I don't think that's going to hold good. Is that going to go down to 12 or 11? So based on that. Second is sectorally, which sectors are more going to be impacted from a future? Like I said, take this quarter out of the picture in terms of what has already happened. But the future outlook in terms of that, the demand outlook for the summer from consumption. So a lot of factors are in the way. So I expect DIIs to be cautious, to step up their buying gradually over the month. So to that extent, the markets, retail, I think it depends on how they behave, because Thursday, Friday, they clearly came back. The numbers for the week itself showed mid caps and small caps doing better than large caps. So indicating a lot of retail support. And there also, you saw the mutual fund inflows also coming in at 32,000 crores for SIP and 40,000 crores overall. So retail clearly feels that it's a slightly oversold, time to re-enter. But today's action, how will retail react to that? The fact that today is going to be a weak market. Are they going to sell, unwind whatever the traders are going to unwind their longs? It's an interesting week, but expected to Mr. Trump, whatever called Trump-induced volatility is going to be a dark cloud on the markets for this week also.
How do you, what do you think, how investors should be trading amid this noise which is coming in, whether noise from Twitter or whether it's noise from Truth Social? How should investors look at their portfolio, and how should they be investing in these volatile times?
So I would say that they have to keep gradually. This is the phase of accumulation. Because you see, whatever said and done, the war is going to be a time-limited affair. Okay, and hence the impact on oil will be time limited. Yes, oil may not settle back at 65, but it will settle, let's say, at 80, 85 once the war is over. So it may take a month or 2 months for the war. So this is a period of accumulation, because I don't see that even at oil at $80, Indian economy should be able to sustain, albeit at a slightly lower growth rate, will still be the fastest growing country. And when the dust settles, India will still continue to be a long-term attractive market. So This is an accumulation phase, a do not panic phase. So I think that retail tends to overreact exuberantly. Like Thursday, Friday, they jumped in to buy. So they shouldn't be that way. It should be that I'm systematically accumulating through this period of panic so that I add cost averaging into my portfolio. The second thing retail should not do is to rejig their portfolio in the midst of a panic during the war. You will tend to say, oh, paints and tires may correct more, this is more protected. No, this is not the time to take, because the nature of the volatility, gold, banking sector, both these were expected not to be affected by the war, but have got hurt. So I would say do not try to judge, especially the earnings season is on. Stick to a diversified portfolio, probably closer to one that you had before the war began. Keep accumulating steadily smaller amounts if you have cash in hand. If you don't have cash in hand, you're fully deployed in the market, just stay quiet. Don't do any panic related selling. So that's my advice to investors.
Okay, Sunil, and we'll also take your advice on what to do if you do have cash in hand. But first to the stock newsmakers this Monday morning, and Karan is here with that list.
Well, absolutely. Let me start off with the electronic vehicles segment. EV stocks are in focus on the back of the draft EV policy in Delhi. From 2027 onwards, only electric three-wheelers will be allowed for new registration. And this will be followed by a full transition in the two-wheeler segment, with only electric models permitted from 1st of April 2028. Now, there's a good news for the residents. Furthermore, residents can receive an incentive up to 1 lakh rupees when they purchase a new electric car after scrapping their older BS4 vehicles. So do watch out for the EV stocks. Followed by a couple of updates from Adani Green and Adani Energy. For Adani Green, the operational capacity is up 35% year on year to 19.3 gigawatts. And for Adani Energy, the power transformation capacity has increased to 1.2 lakh megawatt ampere, and that is up 37% year on year. On that note, the company has also shared an update on the BSS capacity expansion, wherein the company is planning to expand its BSS capacity to 10 plus gigawatt hour by FY27. Enviro Infra Engineers is also in focus on the back of the company winning orders worth 971 crores from Swachh Maharashtra Mission Directorate. On that note, the company's order execution timeline for this order is 24 months. The order book stands at north of around 2,000 crores with a book to bill of 2 times the trailing 12-month revenue. Texmaco Rail has received an order worth 24 crores from Hindalco with an execution timeline of 5 months and an order book standing north of around 6,000 crores. Panacea Biotech is also in focus. The company has received a letter of award from the Ministry of Health and Family Welfare, and the order value is 21 crores. And finally, we have Zaggle Prepaid. The company has entered into an agreement with Generali Central Insurance to provide Zaggle for your platform. Remember, this platform is an AI-powered business spend management platform which is designed to automate the entire procure-to-pay cycle. So do watch out for Zaggle Prepaid as well.
Okay, thank you so much for that, Karan. Interesting. Kunal, you know, some of the stocks, especially in that EV basket and two-wheeler EV basket, really buzzed all through last week. I was looking at the numbers at the end of last week, and we saw a move on Ola, Aisha, if you remember. 43% up all through the week, and both of us are wondering what's gone wrong, and clearly
EV
now
policy.
now
we know why.
Now we know why. Kunal, on charts, any of these looking attractive?
Yeah, I think Ola is something which is shot up very, very well, because the stock moving from 23 rupees or 24 rupees, that was a low for Ola, towards 40 plus mark. It's been a ferocious comeback by all means for the stock price. Yes, one could still argue that the stock is still in a downward degree trend, because when you look at this from the listing highs for post listing highs for Ola, where the stock was 150 plus levels, it's still consistently making a pattern of lower highs and lower lows. But then I would sense that these kind of moves which happens into stock prices, they generally become the first strong indication that a major bottom could be in place for the stock. I would sense that now could be a very good time where traders should use dips to accumulate. There could be a possibility that after this 20-point up move broadly for Ola, that the stock may come back towards some sort of a mean support in between these 20 points, say closer to 28 or maybe 34 kind of a zone. If that happens, then I think it's a very good territory for traders to look at a longer term buy.
Well, Reliance has been the other very interesting one. And Kunal, I want you to come in here because, time and again, Reliance makes that attempt, claws back to 1400. but unable to hold that mark. As of last week, it slipped about, or rather past month, it slipped about 2%. But what's your reading on the charts? Where does it go from here?
See, I would sense, Aisha, that the stock for Reliance and the charts for Reliance are still into a sluggish trend. When I look at this from, say, the last 7-8 month spectrum, in mid of 2025, when the market started to show signs of recovery, Reliance was trading at 1350 levels broadly. It went up to 1550 levels, and now it's come back to a 1350 mark. So when I look at it from that spectrum, it's just a stock which is trading into a major band of consolidation. The bigger concern for Reliance Industries is the volatile beta the stock has, or the correlation rather, the stock has with respect to the benchmark indices. Many a times we see that Reliance, being one of the second best weighted stock in the Nifty 50, should probably have a direct impact or cause an impact on the benchmark indices movement. But that's not been the case for the stock for, I think, the last many months which I've seen. And that's why I think that maybe the stock is just about going through its own zone of price trend. It's devoid of how the markets are moving, because after this 1800 point, 2000 plus point kind of a recovery for the index, you would probably not expect that Reliance should not have moved up by at least 5% to 7% at least. But the stock has seen a very meager kind of a bounce back, 2-3% broadly from its lows. So that's why I would believe that Reliance is in a stage of underperformance. I think it's always better to try and wait for the time when the stock comes back on its own, comes back into a strong correlated mode with respect to the indices. That has still not happened for the stock, at least in the last many months.
Okay, let's stick with Reliance. Ashesha here with, and Reliance has been an underperformer, right? Ashesha here with a build-up with regard to the bull versus bear case on Reliance. Ashesha.
Well, yes, several factors continue to remain at play for big boy Reliance Industries. So we decided to undertake a bull versus bear case exercise for this stock. First up, let's try to understand the impact of West Asia crisis. Remember, it is positive for its oil to chemical business because it earns higher petchem margins, and it also earns as a result of jump in diesel cracks, which have risen to as much as 42%. So that's the bull case scenario. But on the other side, deteriorating sentiment continues to weigh heavy on their retail business, and if at all growth were to slow down going forward, perhaps we could see some impact, some sentimental impact on retail business, and that is the bear case scenario that we are working with. Shifting focus to the gross refining margin volatility that the company faces, but remember, the company benefits disproportionately during disruptions, and that is what we are seeing play out currently as well because of West Asia crisis. But because of the volatility, which is dependent on global factors, gross refining margins are very volatile, and they continue to impact earnings of the company across different sectors. Shifting focus to a couple of other parameters then, and let's talk about Jio listing, which is of course the most awaited listing of this calendar year as well. Jio could trade at a premium as compared to its peers because of its low free float, which is likely to be at about 2.5%. But remember, holding company discount might come into picture, and that could result in correction of Reliance's stock price going forward because of the holding company discount which could come into play. Meanwhile, let's also talk about value unlocking exercise that the company has been undertaking over the last few years. Jio listing this year, retail is likely to get listed over the next few years, but there is always some kind of uncertainty around the timing of value unlocking. Of course, Jio is scheduled to get listed this year, but we don't have any clarity on the timeline of when retail business could get listed. So that is another factor that you need to watch out for. Let's also talk about valuations. Currently, of course, it is reasonably priced. It is trading at about 17 times 1 year forward price to earnings, which is of course lower than the 3-year average. But there is uncertainty around market valuations and the valuation at which Jio could get listed, and that could remain a factor to watch out for, and that could weigh heavy on Reliance's valuations as well going forward. Shifting focus to debt then, currently net debt to EBITDA is at just about 0.6 times, which is pretty comfortable, and the management remains confident of maintaining net debt to EBITDA below 1 times going forward as well. But they have several capex plans, especially in their new business forays, and that could weigh heavy on the net debt figure and the net debt to EBITDA figure going forward. Shifting focus then to each of their businesses then, and first up, let's talk about their retail business. The long-term consumption story continues to remain intact for the retail business. But remember, they are ramping up their quick commerce business, and this is likely to weigh heavy on companies' earnings and companies' margins going forward because it is a capex heavy business. Telecom, meanwhile, tariff hike before Jio listing and after Jio listing is likely to aid revenue for their telecom business, which is Reliance Jio. But perhaps we could see slower than expected tariff hike on account of regulatory hurdles, and that could weigh heavy on the telecom outlook going forward for Reliance Industries. Shifting focus to other businesses the company is in, and FMCG, of course, outlook for this business also is very robust, but the company is expanding aggressively. They have several expansion plans and pricing strategy which might hurt outlook, which might hurt margins for the company going forward. So that's as far as the FMCG business is concerned. Remember, the company has forayed into several new age businesses, which includes AI, which includes new energy, data center business. But there is always an execution risk and uncertainty with respect to timing, with respect to when these new businesses will start earning profits for the company. So that is the bear case scenario when it comes to new businesses. Shifting focus to capital allocation, then the company has been aggressive when it comes to investing in new businesses, which indicates the long-term vision of the company. But there are concerns around too many bets simultaneously, which might impair company's capital allocation strategy going forward. Lastly, let's also talk about the FII holding, and that has been a concern because it has reduced from 28% in March 2021 to 21% currently. So clearly, FIIs have reduced their holdings over the last 4 to 5 years. But now that the stock is trading at reasonable valuations, perhaps the stock might attract FIIs yet again.
Okay, let's see which way sluggish Reliance moves from here. We'll discuss all of that and more, but after this very short break.
Welcome back, and of course we're tracking a large number of stories across the board, but one of those big ones, and let me go across to Sunil for a view with regard to exactly that, is the EV policy, especially with regard to Delhi. This could well be the blueprint, Sunil, with regard to how other cities and states implement EV policies going forward and accelerate EVs, EV adoption across the spectrum, right? Two-wheelers, passenger vehicles, commercial vehicles, three-wheelers as well. Do you believe that this could be a big trend? Is this even likely to kind of be something that's sustainable, given the fact that the requirement in terms of the adoption is very much accelerated? Is it realistic?
No, I don't think so. It is because of the fact that you have to take 3-4 factors into consideration here. So first is that Delhi is a unique case because of the pollution levels being ridiculously high, of course, driven by farmers burning crops in Punjab to other factors. It's a very specific. Delhi is the only state for them to include odd even car, road on traffic on the road. No other city or state has implemented that. So I think just no point in translating what Delhi says into the rest of the country. That's number one. Number two is the fact is that remember that the auto industry across the country is a very strong employer and manufacturing generator, leading to a lot of revenues for a lot of states. Tamil Nadu is a case in point. Maharashtra is a case in point. So the existing auto, the ICE engines, the driven auto thing, I think yes, every company is showing that it's adding EV to its portfolio to be prepared for that. But it's not an overnight change. I think Delhi is one of its kind. The rest of the country will take it slowly. The third aspect here is the availability of EV infrastructure. Intercity traffic. Even now, I own an EV car. I hesitate to take from Chennai to Bangalore because there is just 1 or 2 or 3 points on the way. And the risk that I suddenly run out of battery, it's very great. So building up the EV infrastructure is probably going to be the first focus, which has to, and there is again a demand versus supply. Somebody who's investing in EV infrastructure has to think that what will be my payback period. So it's going to take a bit of time. Fourth is that overall, if you see from an EV perspective, it's not as environment friendly as that because ultimately for the battery, for that you need energy and power and rare earth metals, lithiums and cobalts and everything. So those are again terraneous resources which have to be extracted. So it's not so clean and green as a solar or a hydrogen energy, right? So the EV battery, then the replacement cycle of EV batteries, we still don't have a proper, like 7-8 years, the replacement, whether my car that I have, I'm not sure when it crosses 7 years whether I will be able to get a battery replacement. So a lot of question marks. Yes, it's a thrust. Given the oil prices going up, there is an additional incentive to push for it. But it's, I would say, an evolving journey, and you play it with care. Yes, today, because of this announcement, EV stocks will go up and all of that. Those are knee-jerk reactions. I think suddenly IC engines are not going to go out of favor. For heavy, especially heavy logistics movement and all of that, you need a bit of high speed movement. And so I think the move will be to better do a blend of ethanol mix into the regular fuels, the better to do more green diesel. And that those will be also stories that will play in addition to a pure EV play.
Okay, makes sense. Sunil, the other thing I wanted to ask you was, you were talking about as to how this is the market when you want to accumulate if you do have some dry powder. What else are you liking in this market? And more importantly, what is it that you're keeping on your watch list in terms of where the positive surprises may actually come in, if at all, this earnings season?
So first of all, watch list would be consumer discretionary, okay, because it's a summer. There's also an impact of the oil price because they all use paint and steel and everything. So all of those impacts will be there in their current earnings. So I'm not so focused on the current quarter's earnings for the consumer discretionary, but by the time the consumer stocks come in, the sales number during the summer will come in. If that gives a positive, then I know the future quarters are going to look good. So I think that's a very key watch that I want to see. The second is in terms of even within the consumer pack is the monsoon development, how that is being panned out, and it will have an impact on rural demand, on FMCG, and a lot. So that's another thing on which keenly I will be observing. The third is, of course, as far as banks are concerned, you see, interest rates don't look like they're going to get cut anytime soon, either in the US or in India. But credit growth is growing strong. So I would like to see whether if, for example, in the consumer durable space, you see demand going through up in the summer, it means that people are willing to pay higher EMIs because they want to buy those goods, because the GST cut is going to help in reducing costs. So if the credit growth of the banking system continues to sustain, then the pricing power can come to the banks and hence they can protect their NIMs. However, if people are postponing their purchases and not buying because private sector banks and NBFCs are critically determined on this retail lending piece, then I would say that banks have to watch, because if the credit demand is slowing down, then their NIMs could be under pressure, because cost of deposits is going to keep firm and slightly rise maybe because of the overall inflationary situation on that aspect. The final thing I wanted to see is the on the capital goods space, right? I want to see how that's developing in terms of, is the private sector capex picking up? Are companies during their earnings call, are they talking about expanding capacities? Then I would say that that's a good news. Though currently all the stocks are under pressure, it may be a good time to allocate more into that space.
Interesting. Kunal, the leaders from last week, your realty, metals, do you think those sectors will manage to withstand the volatility of this week, or do you think they will also cave in?
I think Aisha, they would probably retrace a little bit, I would say, from their swing highs, because there's bound to be a point when the market goes into a slight bit of a mean reversion or a profit booking mode, that the sectors which have performed very well, they would tend to come back into a slight corrective mode. But I would still not call this as a reversal for the entire rally which has happened for the real estate stocks or the metal counters, because you're looking at a point where there are multiple things which have happened. The market breadth has opened up very well. The risk on appetite has come back. You see the kind of mid caps and the large cap names which are trying to come back to their respective long-term moving averages or 50-day moving averages, as the case could be. When you see this kind of an appetite, it tells you that the markets are going into that zone where there could be more stability which could be in place. And I think in that aspect, the real estate stocks, metal stocks, I think they would find buyers even at minor dips for themselves, because we are not in that scenario where the markets were very jittery, like in the month of February or March throughout, where the markets were keeping too much eyes on the kind of news flow. surrounding themselves. Right now, we know that maybe sooner or later there could be stability which could try and come back again. So I think in that aspect, I would sense that you might expect mild bit of profit booking over here for the real estate stocks, metal counters. But as I said earlier, even for the indices, that should be taken as a good contra buying opportunity.
Okay, that's that on whether you will have resilience from the stronger sectors from last week or not. But back to autos, and clearly the national capital is accelerating its clean mobility push with a new EV policy draft targeting a phased transition to electric vehicles by 2028. From 2027, only electric three-wheelers will be allowed for new registrations, followed by two-wheelers from 2028. Shrishti is here with more details on that.
Well, absolutely. The electric vehicle has definitely got a big push in the state of Delhi, and the government has unveiled a new draft EV policy to accelerate the adoption, wherein the higher purchase incentives will be given for two-wheelers, three-wheelers and electric LCVs. Though there could be no direct subsidy for the electric cars, but the tax benefits will continue in the draft policy. Now, there will be a complete ban on the ICE two-wheelers and three-wheelers registrations from April 27 and April 28 respectively, and mandatory EV adoption will be there for government fleet as well as public transport. Now, this policy will be valid till FY30 with a total outlay close to 4,000 crores. Now, let's talk about which will be the key beneficiaries and how Delhi as a state is positioned in the electric vehicle market. So, as of now, they have a very lower penetration in terms of their overall vehicles on the road. It's close to 3 to 4% of EV penetration in the overall sales category for two-wheelers as well as three-wheelers. But the three-wheelers actually have the highest of the share, and especially the LCVs. And in that as well, when we see the companies who could be the clear beneficiaries, then top on the list, definitely TVS Motors, which has the highest share, almost a 24% market share in the EV side of the business in the state of Delhi. This is followed by Bajaj Auto having almost an 8% market share, and Nether Energy is also seen to be gaining market share, especially in the last 6 months. Now, let's talk about the passenger vehicle side. The Japanese OEMs, as we see that they have been lagging in terms of their new models on the EV side. So clearly for now, the beneficiaries stands out to be Tata Motors as well as Mahindra. And lastly, from the three-wheeler side, it's Bajaj Auto that could be the biggest beneficiary that enjoys more than 85% market share in Delhi's L5 market. And definitely Bajaj Auto is expected to gain from the three-wheeler as well as their two-wheeler portfolio. But this is not just about one state of Delhi, because this is indeed a big push coming in at a time where there are concerns on the energy crisis, and there is talks that maybe this could be followed by other states too. So let's watch out for that. But for Delhi and for select companies, it's going to be a big push. Back to you.
Okay, thank you so much for that, Srishti. That's pretty comprehensive. Some of the names within the auto basket which will be in focus will also be a TVS Motors and Ola Electric and Ather. All of those will likely be a Bajaj Auto, of course. Within that three-wheeler pack will also be one of those stocks which will be in focus. All right, enough done with regard to auto. Let me talk about banks and NBFCs, as well as you have AMCs as well. And very interesting Morgan Stanley note where they've upgraded MCX, they've upgraded ICICI Pru Life, they've downgraded ICICI Pru AMC. Sunil, within that financials AMC basket, is there something that interests you?
Well, I want to talk stock specific, so excuse me on that. But overall, I remain positive on the non-lending space within the NBFCs, which is the AMCs, the insurers, and the stock market infrastructure companies. I'm overall fairly bullish on those, because the AMC numbers that came in also showed that retail interest in mutual funds continues to be strong, and hence I think that will reflect also in terms of their revenues going forward. So while valuations are not cheap in that space, I would say that given India's penetration story, they are a long-term buy and hold space.
Kunal, how do you trade on Nifty Bank? The FI opening this positions is over 10,000 crores and a lot of long positions coming into the Nifty Bank from the FIs.
So, Sadit, the bias will be on the bullish side for the Bank Nifty also. And I think we just have to wait for the point where, on Wednesday, when we had that huge gap for the Bank Nifty, when the Bank Nifty opened up from 52,000 mark towards 55,000, 54,800 approximately. after that kind of a steep uptrend, I would sense that maybe a filling of that gap or a partial filling of that gap could be a good point where traders could look at a buy. So in terms of Bank Nifty specifically, I would wait out for say a retest of 54,700, 800 kind of a zone for the banking index. So a couple of percentage points from Friday's closing, that would probably coincide with 23,500 also for the Nifty in that sense. And that I believe could be a better risk reward territory to go for a buy on the Bank Nifty.
Okay, that's quite interesting when it comes to the Nifty Bank and the call in there. But Kunal, within the constituents of Nifty Bank, what's the tilt, the bullish or bearish bias that you would have this week or at least today?
See, I think over the last couple of days, we saw traces of these large cap private sector banking stocks making some sort of a comeback. I'll not say a durable comeback because when you still look at the price patterns from their Feb highs or Jan highs for many of these names, they are still trading at a much steeper territory on the downside. So names like ICICI Bank, you saw Axis Bank recovering decently from its previous swing lows. There were some traces where likes of Kotak Bank also started to pick up pace for itself. HDFC Bank formed a good bottom for itself at the 750 mark approximately. So the larger cap stocks are showing signs that maybe we are looking at a stable point for these names. But I think the alpha could be probably generated in the mid cap end of the private sector banking names or the PSU banking stocks. For example, you saw AU Small Finance Bank. That is something which has done reasonably well for itself. Federal Bank has looked very attractive on the short-term charts. You look at CSB, City Union Bank. These stocks have done very well for themselves over the short-term time scale. In fact, many of these stocks have actually surpassed their individual 50 DMAs in the process of the last 3-4 days in the mid-cap side. So I would probably want to look at those names primarily purely as a trade on the short-term basis. And once the large cap private sector banking stocks maybe show signs of more durable breakout, that's where one could start to look at allocating more capital over there.
Okay, all right, so that's the take. Chandan Taparia also joining us this morning. Chandan, how are you looking at markets? Of course, Chandan Taparia of Motilal Oswal. Chandan, how are you looking at markets and what are you expecting this week?
Yeah, good morning. Thanks for having me. So, in the last week, the Nifty recovered by more than 5.5%, and we recovered by more than 50% of what it declined in last 7 to 8 weeks, which clearly indicates that declines are being bought or multiple supports are visible or the bargain buying is seen in the market. However, due to the geopolitical tension, it may open lower, but I believe the short-term bottom has formed. It may retest the key support, and those support could be bought. So as of now, 23,750 is an important level because there is a 38.2% retracement of the entire down leg. So if manages to hold 23,750 on this decline, I believe again market could be bought with support of 23,333 for an upside target towards 24,250 to 24,450 marks. If I look at the Bank Nifty index, it witnessed a recovery of more than 5,000 points in last 5-6 trading session. But again, need to look at the key support at 54,500 for buy on decline stance for an up move towards 56,500 kind of level. If we need to look at the stock specific setup, selective auto counter could be in focus. We have positive on the counter like TVS Motor, which has been holding well, has been making a high top, high bottom, buy on decline is advisable with support of 3,700 for an upside target was 3,950. Positive on the capital market theme, BSE looks quite positive. We have seen rally of more than 15% on the last week. Buy on decline could be applied, and a decline towards 3,200 can be bought with support of 3,120 for an upside target towards 3,400 level. So selective capital market stock and auto stocks will be focused on buy on decline in this market scenario.
Okay. All right. So Chandan, what's you've given us picks already to some extent. But anything else within the mid-cap basket which is looking attractive? You spoke about a couple of financials. Anything else?
So I look at one name that is Grow from Capital Market has been making high top, high bottom from last 7-8 trading session. Given a major breakout, counter has come to its lifetime high levels, even the pre-IPO kind of level. So here positive bias could be seen. However, rallied well in last 7 days, but here we are expecting fresh leg of rally or fresh leg of momentum. One name again I'll have focus on Adani Energy Solution, a major breakout on the daily and the weekly chart after a long time. Here buy on decline with support of 1110 for an upside target towards 1200 could be seen.
Okay. Kunal, any mid-cap ideas in your basket?
Yes, Harsh. So I'll go with Nykaa. I think a stock which has been doing remarkably well, trading above the 200-day moving average throughout. I think in the last couple of weeks or this 5-6 weeks of the market volatility looks attractive at the current juncture. Also, would look out for targets in the range of 267. Stop loss could now be placed at closer to 250 mark. For the stock.
Okay. Let's switch focus, go back to global because the